11:55 March 11th, 11:55 March 11th. I'm going to start a midday call. I'm waiting to see the link posted in the public Twitter and my private Twitter. Mikey, tell me when it's in there. I'll retweet it. Um, okay, here we go. If you want to come in to watch, okay. So just take a second here. Read the disclosure. Um, okay. So here it is. Here's your disclosure. Some guys continue to ask me what's Regular All Access. Well, Regular All Access is my subscription-based model. You go to t3live.com/RAA. You could try it for a month. You could also get a lot of education on my process, but that's not why I'm doing this. I'm doing this to hopefully help you guys guide. Every now and then I do a public, you know, call. This is kind of like what I do. I do a morning call and I do a recap every single day, or at least Monday through Thursday for Regular All Access. Every now and then, on public Twitter, I'll do like a 2-3 minute quick take, which I do at 6:30 in the morning. I think a lot of people have been very thankful for that. Very complicated times right now, so I'm trying to guide people as much as possible on how to navigate, whether they're an active professional trader like me, or whether some people are asking about what do they do with their long-term accounts, whether it's a 401k, a 529, 403b, whatever. Lots of things to consider when a situation like this happens. At this point, some people are excited that we're 18 or so percent off highs because they've been sitting on cash and now they can put it to work. Some shorts are happy that, hey, they've been trying to short the market, for multiple years and they've never had any traction, and this was their time to act fast. Some guys like me who like to be long but have a system and a process to get out of the way when trends change, I'm very excited too, because with this volatility, the ranges increase and there's lots of opportunity for the planned professional trader and for those of you who are willing to learn, as well as some opportunities longer term, which I've discussed on some of the weekends. So let's get into it now. For those of you who have downloaded my ebook, hopefully you were in a great position because I came out with that like 2 to 3 weeks before the 8 and 21 day broke and before the market lost momentum. When did that happen? If you look here at the chart, you will see, we talked about that right here. Every single day I go over when the 8 and 21 day broke. 8 and 21 day broke right here. I was in the beach. I was in Miami. I'm like, hey, guys, this was loose and white action. I got stopped out of some names. While I think Chase was practicing basketball with the trainer, and I didn't get back in them. Then I was, oh. And then the next day when I was sitting there on that that lounge chair, I'm like, you know what? Amazon just broke 21.25. Google broke 14.98. Apple broke 3.15. Netflix was breaking, I think, 3.77. I'm like, I'm out of all those names. And now I went from 20 positions on Thursday to 12 on Friday to 5 by the close, still with the spider hedge and a VIX, because this is what I do when we break the 8 and 21 day. Listen, I did the same thing here. Okay, if you remember, just to give you a little bit of a different scenario on how, when are things different, how is this different? Well, here's where the active trend started above it. This day I probably went from 12 positions to 2 or 3. Bottom tail basically filled the gap, showing the gap had no power. Then all of a sudden, if you guys remember, we consolidated and then the rally resumed right there. Okay, so if you got out here, you were able to get back in here after price discovery. Yes, maybe it cost you a little bit of money and it's a little bit of annoying to be safe, but it kept you, safe or in that routine. Same thing happened here. Remember on this day, if you look, this is when I was in a bunch, riding the trend from here, got out of most positions again, kept a few, didn't get hurt on this, filled the gap. I remember on this day, it looked like we were going to break lower and then we resumed. So here, higher, that was when the coronavirus was starting to pop up in China. That was when I sent out that tweet saying, hey, a bunch of friends of mine were supposed to go to China. Their family said, don't come visit us. When was the last time your mom or dad said, don't come here? This is a lot more serious than I thought. And that's when I was like, I think, they're understating what's happening there. So between that and all the FANG names losing momentum and, the 8 and 21 day being lost, I went from 20 positions to pretty much net short that weekend. Okay, then what happened? Unfilled gap. Okay, here we filled the gap, there we filled the gap, here a gap, there a gap. No, I'm kidding. Anyway, that gave you some clues. Holy cow, this might be different. Now we lost the 8 and 21 day, and now we have this big bearish gap that shows power. Be careful. And what confirmed the weakness of that bearish gap? Well, right here, this was the low. This was 32.14, okay, from that day. and we tried to rally, created an H cell setup, and then broke 32.14, and then you had to be out of the rest of your positions. And if you did so, here was at 28.55. We rallied back up to 31.36. I remember writing here. I went on Fox Business, like, what are you doing now? I'm like, well, 28.55 is the point of reference we know. We're only 10, 12% off highs, or 12, 13% after the rally, less. Why would that be the case when China's basically closed for business? Supply chains are being disrupted. There's rumblings in Europe about Italy and potentially Greece and whatnot. So I got a high conviction, which I rarely do. I started last time, I think we did a midday call, was like that Wednesday, Thursday. In here, I was buying the VIX 27.29s, and then I was buying the 33.34s. In here, I was buying the SPY puts. Remember the 300 puts that you store in the VTF every single time? Okay. And then, when we broke below, remember I was talking about 30.30. I think that was on Thursday. Okay, right here, I said, now I feel like this V, remember the V, guys? You guys could look it up because everyone tries to call everybody out. Remember I was drawing the V? I'm like, hey, guys, we have the V, and we should at least get a W. Okay, and that was up here, and obviously we got a lot more than that. So I actually was pleasantly surprised on, I hate to say, surprised and pleasantly surprised, but yeah, I was short on Friday for a retest at 28.55, and I got much more than that. So the VIX calls were from $1 to 5 or 7. The puts went from 2 or 5, which is depending when I bought them, to like 20 to 25. I got out, and then I was also short to SPYs over the weekend. So anyway, that's that. So now where are we? So here we are. This is the lower range. Yesterday was a bit of a trap. Retested 27.31, closed strong. I was long spiders overnight, and I actually got out of it. I'm long a tiny bit versus the low from 15 minutes ago, which we'll get into. We have this lower range. It could be a bear flag, or sometimes it develops a range and then it retraces. We don't know. All we know is 27.31. If you look further out, okay, here's 26.10, okay, which was this little level here, and then this is 23.51, which is the low from 2018. So these are all the things that we know, okay. What's today's low now? Today's low now is 27.60. So that's a point of reference. I'll write that in, 27.60. If you are trying to be long a little bit now after the morning price discovery where we put our low in as of before 12 o'clock, then that is now your stop, 27.60. Before coming in here, I basically bought a tiny bit of SPYs. And this didn't hold, so I was out of it mid-morning. I bought some 279.50s. We rallied to 281, then rolled over, got out at the morning low, and then I just kind of put a little bit on before, okay, versus the low. What's the low here? 276. Let's get rid of this. The low is 276. What? 276.16. So if you are thinking that we do not break 273.50 and you want to be long a little bit, you could be long a little bit versus 276.16. Okay, that is this. Again, this was a bit of a trap. It went into the gap, and now you can kind of get rid of this because it's a little bit different now. So this high here is 28.52. It's now in this lower range, but an inside day. Hard to hard to tell what is next here. Okay, we're still very oversold, but not much of a bounce. This is the low to trade against. This was your prior low. So, listen, guys, if you got long overnight and you stayed long, or you were long yesterday, okay, it happens. I did it. All right, I started buying in here as they couldn't bring us in at 2 o'clock yesterday. I made good money yesterday, and then at the end of the day, I'm like, guys, I'm taking a third home long, just a third, because we've had misdirection before. If you look over here, big green day, red day, big red day, green day, big green day, red day, misdirection. So you have to be a little bit lighter overnight. Plus the size of the ranges are huge. So anyway, where are the SPYs now? SPYs are rallying a little bit, 278.61. So I'm long a little bit. So how do you know if I'm long? If you were watching, you go to the VTF. Here's a VTF. Everyone's talking a little bit. It shows that I'm in the SPYs here. SPYs are here. I was in overnight. I bought a little bit, and then I had to sell some, whatever, and it shows what I did the whole time with it. And I'm still long some, so we'll see. I did trade some Apple, tried to catch a little bit of a bounce, was heavy. I played Tesla from red to green. It was a nice trade. And then I do have on here, leftover. Um, I sold calls, getting short synthetically Tesla. Yes, I was long Tesla. I loved it from 340 up into the 900s, but then I also got away from it, and then I sold calls because it was too extended and made money. And I also played it today. Look, if you look at Tesla here, I bought it at 931. Okay, just for cash flow, it was down. It was only down $8-9. I'm like, why is that down $8-9? And went down 9 points. Bought some, went green, sold some, and then I sold some up, and I made good money, like 10, 12 points on a day trade. And I'm allowed to day trade these things. Why not? Cash flow. So anyway, we'll get into that. So anyway, this is what this one. So it looks like AMD, David Lee saying once green. If you find yourself lost, this is what we call the Trader Hub. There's like 300 people talking about their trades and whatnot. And last time I showed you this, I think on last Thursday or Wednesday, I was long VIX calls, 27 28s, and the 32, 33s, 34s. I went to 40. I was long the SPY puts. You were able to see it all. So anyway, now obviously you have a lot less exposure and stuff. Where also, if you go back, take a video from mid-March, I was in 20 things. I was in, you name it. And then a lot of people like, Red Dog, why aren't you looking at any of those IPOs from the past year or so? You did so well with those in December into January. I'm like, that was a different trade. That was what we call the January effect. We played pins, we played Uber, I played Lyft, I played CRWD, remember Beyond from 75 to 135. That was a great trade. Even CGC, the wellness names. I was pounding the table mid-December, and CGC did go from 18 to 25 plus, made good money. Then I get out at 21. Someone was like, "Hey, Red Dog, do you see where CGC is?" I'm like, "I don't care. Like, where is it?" They're like 14. I'm like, "That's why you use stops. That's why when the trade changes, you change." Anyway, let's move on. You go back here. So I think, I don't know, I'm trying to think of the best scenario where I would put money to work. It would be, I guess, if this were to be on the lows and break this and then into Friday, see lower. But in here, it's really not that interesting. You can be long versus the morning low or long versus here. Or if you're short, just give it to the high of the day. But I think there's a little bit more risk being short right down here than being long, just in case, there's some big meeting about the CDC, and they're still going over what they're trying to do as far as some kind of stimulus package. I think Congress goes on rest tomorrow, so they got to do something. If they don't do something, then whatever. So anyway, that's that. So you go to the Qs. Qs are well off the lows, still acting stronger than the rest of the tape. But again, here too, broke the 8-21 day. Here's your pro gap, rallied up into resistance, sold down. So now this is the prior low. The XLF guy's like, "Oh, what could you have seen with the banks? What's going on here, Red Dog?" I'm like, "Well, look at the trend that broke here at the 8-21 day. That could have been your way out right there. And if you didn't get out there, look at this. It held the 200 day for a day. Remember, momentum traders get out when the 8-21 day breaks. Investors shouldn't be holding things that are below the 200 day. And look where the 200 day break was at 28. Now look. All right, so what now? I don't know. Held the weekly low. Looks like it's going green a little bit. Looks like, when I walked in here before, the TLTs were going red, and the TLT red usually helps the equity markets rally a little bit. So I bet you the TLTs are red right now, but we'll see. Still below this gap. So, buying versus an area in the banks is the only way to do it now, especially if you sold here or you sold there. So the same thing with Bank of America this morning. Buy versus the 2150. Let's see. My language is still here, guys. Just so you know, I post charts every morning, for Red All Access. So, and I have language. So my language here was Bank of America recent low is 2151. Maybe it's worth a look to buy for a cash flow long as it went out strong yesterday. And right now it made a little bit of a higher low. Does it mean it's off to the races and back to a go-to name? No, but it means that, hey, put a capitulation low. And if you sold here when it broke the 8-21 day or when it broke the 200 day at 31, at 22, maybe give it a try. And now it looks like the banks are kind of leading today a little bit. XLE, not doing a whole heck of a lot. But, hey, look when it broke the 200 day. It's been below the 200 day since. USO, also, look at that. Broke the trend right here. This is when the 8-21 day broke on oil. So if you're a momentum trader trying to play alongside of oil, which nobody has been, that I at least haven't been doing for at least a year, you could have sold here, or when it broke the 200 day at 12, and then look, it's been following the 8-21 day down. Okay, here is up a little bit until there. So again, the 8 and 21 day can get you out and get you away and keep you away, or even give you a mechanism to be short. But anyway, now it's here. I guess it would help the market if this thing were to get into this gap a little bit. Let's see the TLTs now. Oh, TLTs did go red. So here, TLT peaked at 179.70. And pulled back the last 2 days. See if it gets rejected at 168 to 170, meaning, sell some strength considering that it put its top in here. Where did it get to? Got as high as 167. So couldn't even get there. Maybe that's what's helping a little bit as far as the equity market. Now, if this were to fill this gap, chances are equity markets might act a little bit better. But the TLT has been good to watch the past few weeks. So has the VIX because it's helped give you direction intraday. We all need leading indicators to trade or to look at, to help give us clues on whether we're weak or strong. TLT's been great, and that's that. Apple's been stronger than everything else. Look at that. Low, higher low, another higher low. I was trying to be long Apple actually this morning, and I wound up getting away from it. But it's hanging in there. As long as this hangs in there, it's going to be hard for the market to get too much downside. And right now, 269, 263, 256. So it's still best in breed. I saw something interesting about how China is getting as many laptops and as many iPads as possible so they could do homeschooling. I'm sure they're going to do that in the U.S. also. So the iPad that was a dead business because of the size of the iPhone, maybe now they friggin' ramp out and everyone wants an iPad now just in case. And then they'll still have their iPhone, so it could be good for Apple. So anyway, that's just, putting 2 cents together. So it's still strong there. Microsoft's been kind of strong. Here was your red dog reversal sell. Here was your break, and now it's still above the recent area. As long as it holds 150, 152, it still looks pretty good. Amazon, remember, 21.25, get out. I remember when I sold 21.70s. I think friggin' Flo yelled at me, but it's going to, I'm not going to, anyway. But, that was up here. That was your 8-day. Look, it was above the 8-day this entire time. Right here, something changed. You get the hell out of the way. And now this is your low, a little higher low here on Amazon. So Amazon's acting a little better. You can now, kind of put this there. So if you want to be long Amazon, you can be long versus that spot. So Amazon isn't special, but it's worth a look versus yesterday's low of 18.18. So here's 18.18. It held above it. So, semi-constructive. You look for little things to give you clues on what to do. Let's see what Tesla did. Tesla's a little stronger. Okay, went green a few times. Tesla changed when it broke 820, which is right here. We did very well from 340 up to the 900s. Last week I got short calls, which I did. You see it on the VTF. I'm short the 820s and 920s. It should be fine. So today it might be worth a look long versus 605, 608 area. But if that breaks, this can happen next. So here's your 605, 608 area. Right now it was one of the only ones to go green earlier, but the mark wasn't strong enough. Maybe it gets going again. If we do rally back today, or take back half of today's losses for some reason, I would think this might be able to get back into this gap or back up to that spot. Where is it now? 645, so it's basically green. So the market looks like it's going green a little bit. Let me see if I'm still in my spies. I'm still in the spies, okay. Which I just put on before walking in here. I probably would be in some other things, if I was still at my desk, but I'm not. Who cares? I have no FOMO right now. I've done more than enough. I'm here to teach you guys. So that's Tesla. Facebook, everyone's like, Red Dog, you haven't mentioned the word Facebook since earnings. I'm like, because I said Facebook is a sell on rallies. It's probably broken. And I'm not that great at just selling rallies, so I got away from Facebook. If you look at Facebook, when could you have shorted Facebook here? This was the gap down on earnings. Bear flag, broke the 821 day here. That's your sell. Here's your confirmation. Broke the 200 day now. Is this a bear flag in Facebook? Or are we going to rally from this level? It's hard to tell. But right now, from the 213 area down to one as low as 165, I'd be very careful pressing here. I think you got to be careful pressing a lot of places. But here is another potential bear flag for continuation. But sometimes you get like a bear flag and then it triggers higher. It all depends what the market wants to do. If the market wants to retrace and rally back the way it did the last time, then this will probably get back up to where it broke down from, right around this 181. And that would be a spot to probably short it. But we'll see. If you look here just one more time at the S&P, which is off the lows, here, 2731, to this area would be the same kind of thing as 280.55 to 31.36. So you did have a reflex move before it rolled back over. I don't know if that's going to happen here, but at this point, 27.60 is the low from today, and here is your low from the past 2 days. So there's a small chance it goes green, and if it does, then maybe it tries to, maybe get back up towards this area, but it's hard to tell. I'm not that interested. But I definitely think a lot of people that were long overnight that added a little bit in the first half an hour probably got stopped out, so it's kind of hard to get back in there. But I am back in there a little bit. And then again, the longer it stays, just say below, this 28.55 isn't as important anymore because it broke it on the way up. You could say the longer it stays now below, it's 20. You can actually get rid of this now too. Where's the 8 day now? The 8 day today, or the 8 day is 29.29. So this has moved lower. So that has been 29.29. So that's where that is. So this is yesterday's peak. Almost just such a little gap there. I might as well just get rid of this. This is kind of irrelevant now because it got above there. So, and this is kind of irrelevant now too because this was going to be resistance and it got taken out a little bit. So now this really is just the lower range. And where did it just get to? So you could kind of go like this. This is now your lower range. Let's see, why is this over here? 28.82. So yeah, 27.80-ish. It went below before. That's been taken out. What's the high of the day now? The high of the day here today is 28.25. So very some inside action. 28,000 points down is an inside day. That's crazy these days. So here's 28.25. You can almost maybe do it like this way, compartmentalize it. So if it were to stay, in this half, bottom half, it goes sideways, chances are maybe you could press it through here. If it all of a sudden gets back above here, then it's free to go back towards here if it wants to. And then we'll see the overall range, which is here, you could say. This is the new range, 27.31 to 28.82. Does it, stay in this end of the range and create a lower end, or does it pop back above this for some reason later in the day, and then all of a sudden this is the higher end, and then does it, get up to here? And then that's your next spot. So that's how you kind of compartmentalize it. So you have 1, 2, 3, 4 spots. You can make this even bigger here. Does it get back up to here? In order to get to here, it's got to get above here. All right. Does it get below here? In order to get below here, it's got to go below there. So if this, then that. I did a lot of that in here too. Anyway, it looks like we're coming off lows again. I probably need to go to my desk, and I'm probably missing a few things. But that's my job as a chief strategic officer. I have some spies on, so it is what it is. So with that said, it's 12:18. Just so you know, I work out of Short Hills. There's no commute there. I have a nice setup, so I will be using that from time to time, especially if Chase is off from school because of homeschooling. Tomorrow, Friday, they actually are testing whether they're going to be home from school for the next few weeks. There's still a lot of complicated headlines out there, guys. It's probably going to get worse here before it gets better, I would assume. Seems like in China, it's getting a little bit better there. We got to be careful if they have the boomerang where all of a sudden cases pop up everywhere because they went back to work too early. That would be bearish. Right now, the news flow out of China is a little bit better than worse. Europe is still really bad. Italy's on lockdown. They've closed down Milan till April 3rd. And now they closed down Rome, and now they did the same thing in Greece, and you're hearing the same thing in Spain. So Italy is still kind of crazy. Germany hasn't been able to bounce. It bounced a little bit today for the first time. Now we'll see what happens here. The numbers are still very, very small. Drastic measures haven't been taken. Does a city like Milan happen here? I think Milan has 8 million people. Milan had 18 million. We don't know. So there are some things that are priced into what has happened so far, and there's some things that haven't. So you have to be careful. The ranges are big, so your size has to be less. If you're putting long-term money to work, maybe you put a little bit at this point because we've been down 18% off the highs, but then save some just in case we go down 25% off highs or maybe more. If you've been putting in a 529 plan, like I have since my son is 5, he's now 11, I actually spoke to my wife about it. We're going to add a few $1,000s now, and then if we continue down 20%, I might go to, instead of $500 a month, to $750. we'll see. There are ways to take advantage of dips in prices if you have cash, you're not overextended, but you have to make sure you can afford your life. You can't invest when you can't, pay your monthly bills or if your nut's too high. So with all that said, um, be safe out there, wash your hands. I'm not laughing. You just heard that. Just use some common sense, guys. Don't go to crazy crowded areas. Avoid things if you can, and be a realist but an optimist. And this will work out. And hopefully my system has helped you avoid the pain if you're a professional trader over the course of the last few weeks, because the Rather All Access community, which is right here, has navigated this really, really well. T3live.com/RH, try it for a month. And I even think those of you who've been watching my little video at 6:30, you've been getting value just by me talking about the chart of the S&P cash. Imagine looking at 14 to 20 different charts every day and getting 20 minutes of me going over everything besides walking to my desk from the conference room. Well, be safe out there. I'll see you guys soon.